lot of times, especially in emerging markets, people spend in a month what they made in that month. They can't risk a 10 or 20 or 40% drawdown, which Bitcoin can do sometimes. So they have like these working balances. But part of Bitcoin reaching that level is when more and more entities own it, and it's 5 times larger than it is now. And you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Companies come in and just bid up the price to, multiple 6 figures. Try to learn about it and buy some.
Lyn Alden opens with a seemingly simple but deeply profound statement. Bitcoin works. In a world where traditional financial systems regularly break down, that operational consistency is revolutionary. Alden recounts how one of her major banks, a top-tier global institution, suffered from an all-day outage preventing international wire transfers. Contrast that with Bitcoin, which continued to confirm blocks, settle transactions, and function globally without interruption.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I'm bullish because Bitcoin works, which people I think often forget or take for granted. So for example, one of my banks is a Big Four bank that I use for international wire transfers and business banking and all that kind of boring stuff. And like all day today, they've had wires offline because of some technical vendor issue. So just can't send wires. Just money's just stuck in this little controlled pocket. Whereas Bitcoin's still putting out blocks, still working. There's always drama around it, but it's still working. And I think that people forget about that. And I would say that as far as this whole kind of corporate centralization thing, none of that impedes Bitcoin from working. It's not even at the current time raising fees. I mean, that one of the concerns, obviously, when 10x more people want to use Bitcoin, there could be fee pressure on the main chain, which could elevate smaller users to higher layers of the network, which has trade-offs. But at the current time, you have kind of the perfect world, which is that there are these big pools of capital buying it, and yet it's a permissionless network. Anyone's free to use it. I would like to see more people, directly use it. I would like to see more retail buyers buy it and take self-custody of it. I invest in businesses that try to make that possible and encourage it. So I always like to see more of that. But Bitcoin works. And I mean, if people are concerned around MicroStrategy buying or BlackRock buying or governments buying, basically what they're saying is that the weakness of Bitcoin from large entities, like the way that they want to kill Bitcoin is to buy it. Like if that's Bitcoin's weakness, if large entities buy it and that hurts it, then it was never meant to be. Yeah. I look at metrics like, because it's proof of work, not proof of stake, I'm somewhat less concerned around ownership concentration. It still affects price potentially, but I'm more concerned around market functioning. So I look at things like miner centralization, miner supply chain centralization, mining pool centralization, things like that. Node distribution, stuff like that. Less around the custody aspect. And in addition, so a lot of people are also concerned around stable coins eating into Bitcoin's market share for payments, which one, it's not taxable for the most part. So entities gravitate toward that. And also for people that are using it as like working capital, so savings for like 3 months that you're going to send around and receive payments. People, a lot of times, especially in emerging markets, people spend in a month what they made in that month. They can't risk a 10 or 20 or 40% drawdown, which Bitcoin can do sometimes. So they have like these working balances. But part of Bitcoin reaching that level is when more and more entities own it, and it's 5 times larger than it is now. And you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Now, the path dependence still matters. The ideal, optimal, the utopian scenario is all the little people get in first, then the bigger people come in, and like nation states are last, right? You don't want you don't want like Apple to come out and buy, and become the biggest Bitcoin holder after they've already kind of played the fiat game really well for 3 decades, right? But as a permissionless network, you can always choose who figures it out earlier. That's why a lot of us engage in education. Most people here are they have platforms or they individually work with people to help people learn about Bitcoin, self-custody Bitcoin, just relentless education to try to get out there and say, hey, before companies come in and just bid up the price to multiple 6 figures, try to learn about it and buy some. So I think people can keep doing their part for education, and everyone has their kind of like, there's different things you can do. Like you can educate, you can invest in companies that make it easier to self-custody, all sorts of things you can do. But basically everything I'm seeing now is still good for Bitcoin. And I'm bullish because it continues to work.
The current phase, with institutions like BlackRock and Fidelity entering the game, is another chapter in Bitcoin's evolution, not a deviation from its path. As long as individuals remain involved and active, decentralization can continue to expand in layers beyond mere ownership, such as custody, mining, and protocol development. Perhaps the most visionary part of Alden's discussion comes near the end when she addresses privacy. In her view, a truly healthy financial system is one where privacy is normal, not suspicious.
I mean, Saylor's been trying to get others to do the strategy since like 2020, and it took a while for it to happen. Now it's happening. I think it's good that there should be one in every currency block. So if you're, like Metaplanet in Japan makes sense. It's basically a free lunch in any sort of like currency market where there's not one of these, to go make one if it's legal. As far as multiple in the US doing it, there is a network effect advantage for being number one because you have way more liquidity. Like options markets are pretty challenging to get liquidity for because every single strike price and every single duration on the option is basically a different security. And so it's not just like one stock where there's a decent amount of liquidity. If you've got 20 different strike prices based on 10 different durations of what that option is, that's 100 different option contracts, and it's hard to get all of them to be liquid on anything other than like the biggest one. That same thing happens with ETFs. So for example, if you're the top 1 or 2 in your ETF category, you're likely to have a liquid options market, whereas if you're ETF number 5 in that category, your options market is going to look like a ghost town. So there's always going to be an advantage to the first mover, the largest, most liquid. I would be concerned if their debt levels got relatively high. It's hard to measure exactly how high too high is, but generally speaking, the more debt there is relative to their equity and their Bitcoin, the more of a chance that they could run into a bear market problem. Now they are terming that out pretty significantly, so they're doing calculations to basically say that Bitcoin would have to be in more than a 4-year bear market for them to run into serious trouble, where they'd either have potentially trouble refinancing their debt, or having to sell Bitcoin in order to meet their obligations. But that is one of the negative scenarios that could happen, is if they get over leveraged and Bitcoin enters a longer than normal bear market. Other potential tail risks are hack risk. As far as I know, they diversify their custodians. I haven't kept up on all of their filings, so I don't know if that changed or if they moved that around, but I know historically they had 3 different custodians that they used. So forgive me if I'm not super up to date on what they're doing with that. And also tail risk of, it's a giant honeypot. If the U.S. government has a problem, they know where the Bitcoin is. Same thing for, BlackRock. So Bitcoin IOUs are not the same as Bitcoin. So I think that I think they're doing the right strategy for them. And I understand concerns that people have around concentration, but it's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. They still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but it's always a risk. GBTC had more Bitcoin at their peak than MicroStrategy has now. So MicroStrategy has 500,000 and change, whatever the number is. Grayscale had comfortably over 600,000 at their peak before the ETF conversions allowed all the Bitcoin to drain and go to cheaper ETFs and places like that. And then if you go back really far, I mean, places like Mt. Gox, the percentage that were like trading on one exchange in the early days. So I would say people that are concerned here in 2025, I mean, if they weren't equally concerned in, say, early 2021, late 2020, just keep that in mind, that there are these pockets of centralization that happened. Potentially a bigger issue is just how many coins are sitting at Coinbase, because a lot of these entities all like use Coinbase for some or all of their of their custody. So you have, I think, a couple million coins at Coinbase. That's potentially a bigger issue. Ideally, you want ETFs to hold it at different custodians, like Fidelity's doing. They're holding their own coins rather than all just being like an overlay on top of Coinbase. I would like to see more diversification there. So I do think that there are valid concerns around centralization, but this is by no means as centralized as Bitcoin has been, and in many ways far from it. Default privacy, or basically privacy things becoming so easy that people just default to them rather than kind of like just a small percentage of people seeking them out, especially because privacy technologies are better the more people use them. They have that type of network effect. And so for whether it's Chalmy and eCash, whether it's other solutions, just multiple ways to kind of make it more private, I think is good, because when privacy is rare, it's easier to target. And when privacy is ubiquitous, it's harder to target. And I think that part of that is changing people's minds. So analogy I often make is that, before banking, and when we were, even a couple hundred years ago, no matter how much of a tyrant a king was, he couldn't think to surveil everyone's transactions. Just the technological reality wasn't there. And now we've, as again, the speed mismatch issue, now we all have bank accounts, we're all in this like shared ledger that's highly surveillable. People think it's weird if you want privacy, that's the default state is surveillance, and it's weird if you want privacy. And I would like technologies to get so good at just making privacy ubiquitous, almost like by accident, like people don't even know they're private just because they're just using the best technology that happens to be private, where it just becomes normal again. Privacy is normal.
She draws a historical parallel. Even tyrannical kings of the past couldn't monitor everyone's transactions. Today, thanks to digital banking and regulatory overreach, surveillance is the default. People are made to feel guilty or suspicious simply for desiring privacy. What's needed is a return to the norm, where privacy is seamless, default, and frictionless. Tools like eCash, privacy wallets, and privacy-preserving protocols need to reach a level of usability where people accidentally use them because they're just the best tools available. This is the next evolution in Bitcoin's usability and human rights mission. Please like and subscribe.